This questioner intends to put $1,000 yearly into my 4-year-old daughter's education fund. Where should I put it? Invested, one. The other just covers everybody else. What are some of your current market favorites and why?
Well, on the first one, and this is important whether you're investing for a 4-year-old, a 14-year-old, or a 74-year-old. You have to say, what am I going to do when the market goes down? Because I've had audiences like this, larger audiences, and I'll say, how many people in the room are short-term investors? I've never had anybody ever raise their hand. I mean, everybody in the world is a long-term investor until the market goes down. And like in I remember 1990. 1990 was so much scarier than 87. 87, the market just fell down, and you call up companies and said, our business is terrific. We're about to announce a stock buyback, or we're already buying back our stock. Business is great, and we can't figure this out. But in 1990, you had Kuwait invaded. You had the banking system really on the ropes. I mean, really close. You call up a company and said the business was slowing down. We sent 500,000 troops to Saudi, and we were about to fight what people thought was the remember this? It was the 4th largest army in the world, and they were the toughest army in the world, and this was going to be a terrible war. That was very scary. And the public stood up. Some people learned from 87, and they stood throughout that and said, I'm confident about the next 5, 10, 15 years of this country, and they hung in there. So I would say if you want to buy a small growth fund, or you want to buy a balanced fund that's part bonds and part stocks, you put so much money in, put more in every year, you'll be very pleased in 10, 20, 30 years. Stocks will beat the hell out of money markets. They can beat the hell out of bonds. No group of, you think of it, any corporations, McDonald's, any of these great companies, Marriott, you name it, they've never got together and said, geez, we're really doing well. Why don't we raise the coupon on our bonds? Those bondholders have been really loyal. We've been given 8%. Why don't we raise it to 9%? But companies like Automatic Data Processing, they do payrolls. Amazing, prosaic company. 32 years of higher earnings. 32 years of double-digit earnings growth. We've had recessions, we've had wars, we've had changes in Congress, changes in the Supreme Court. 32 years of up earnings. So, that's what you're relying on. Johnson & Johnson, 30 years of up earnings. These are General Parts, 42 years of up earnings. Emerson Electric, 38 years of up earnings. You don't see companies like this in other parts of the world. So I think that's what you buy when you buy a fund. You're buying a bunch of good companies.